Welcome back to Small Caps, ladies and gentlemen. Once again, my name is Kerry Stevenson. Today, I'm talking with Scott Williamson. He's the Managing Director of Blackstone Minerals. Blackstone Minerals have got a really interesting project in Vietnam, but they've just announced yesterday the PFS for their upstream business. But this is an integrated upstream, downstream business. What you have to understand, and it's nickel. Nickel, nickel, nickel. Now, I like nickel. Why do I like nickel? It's gone up 60% in the past 12 months. It's all about moving over into this green clean. And I'm going to talk to Scott about this as well, because for those of you that like this zero carbon emission area that we're going into, these guys are doing some exciting things. They're going to have a zero carbon mining project over there in Vietnam. Pretty exciting times. Scott, great to see you. Thanks for joining me back on Small Caps again.
Yeah, thanks for having me, Kerry. It's great. It's a great time.
It is a great time. So let's start off. Actually, do you know what? Just a brief moment. Explain why you've decided Blackstone needs to have this upstream, downstream, this integrated, I guess, the integration of business of the upstream and the downstream. Can you just explain the strategy behind that?
Yeah, so Kerry, it's a really interesting question. We went into Vietnam when over time we built these relationships in South Korea. We started as a cobalt explorer. We thought that cobalt was a really important metal in the chemistry of the cathode, and it was the Korean end users that said to us, "Can you go and look for nickel?" And they made it very clear that they wanted long security of supply, long mine life tenure, and that was the reason why we went into Vietnam. The other reason that we went into Vietnam is that these end users needed downstream products, so they can't access nickel concentrate. So they said to us, "Can you go and look for nickel sulfide, but can you convert that into a downstream product that is more suitable for our downstream lithium-ion battery industry?" And so they said to us, "Go and look for nickel sulfide, convert it into these downstream products, and so that it is available for our cathode industry, which is the first stage of the lithium-ion battery." And so very quickly we found this asset, but from day one we said this asset needs to be pushed into a downstream product. And so what we saw yesterday was the final product of all of that work is the pre-feasibility study, where we've integrated the upstream business, which is mining, which is what we're all used to, which is producing nickel concentrate. But now we're converting that into these downstream products, which is the nickel precursor, which is the nickel-cobalt-manganese 811 precursor. So the reason why we've integrated it into that downstream business is because from day one, we've always said that going into Vietnam, we're going to build a downstream business. Let's optimize this ore body, which is the majority of the Ban Phuoc nickel mine, for the best interests of our downstream partners. And so we've always had that inspiration from our downstream partners to move into what is these downstream products. And there's only one way to do this, and that's to optimize that ore body, which is the Ban Phuoc majority flagship Ban Phuoc ore body, for the downstream products, which is the reason why we've integrated, and that's why we're driving these significant economics, which we announced yesterday.
We're going to talk about the economics of the project in a minute, but in doing this integration, does it make it easier for your partner, your customer? Because they say instead of just getting the nickel concentrate, where it's further, if you like, downstream, it makes it easier for them in the long run. Is that right? And for you guys, get a better price.
Yeah, definitely. So it's driven by economics as well as the partnership model. So the economics. So effectively, the nickel concentrate trades at a 75 to 80% payability, or 20 to 25% discount to nickel metal. The downstream products that we're looking to produce trade at a significant premium. So we're going from a 75, 80% payability to 120, 140. So effectively doubling the value of the nickel. So the economics are strong, and so that they're obviously driving us down this path. But what's really driving us is the fact that these downstream partners just can't access nickel concentrate. So the nickel concentrate business is set up for the stainless steel industry. So it's an industry
so the majority of nickel goes across to stainless steel, and the poor old battery manufacturers are going, how do I get the concentrate? They can't.
That's right. So they've set up their supply chains to access downstream products like MHP or nickel sulfate, nickel metal, but they haven't yet brought their supply chains to a point where they can access the nickel concentrate products. So nickel concentrate at the moment, all of the nickel concentrate in the industry goes into a further downstream processing route that at the moment is more tailored towards the stainless steel industry. So we now need to change that whole nickel sulfide space into a product that is more suited for these downstream lithium-ion battery players.
Scott, is anyone else doing what you're doing, or any other company? Because it seems to me, I'm not a geologist or a mining engineer or anything like that, but as an investor and a curious mind, it seems to me it makes a whole lot of sense that you're going in this direction, especially with the amount of batteries and the demand going into the future. Anyone else cottoned on to what you're doing and figured out that actually this is going to give a much better payback, as you said, 70 to 80 versus 120?
Yeah, so a lot of our peers are heading in this direction, but they don't have those relationships with the downstream players. So those downstream partners aren't just bringing funding, they're bringing technology as well. So we're not saying that we're the best in the world at producing precursor products for lithium-ion battery. Our whole model and our strategy is built on the fact that we've got these strong relationships with the precursor cathode manufacturers. And so a lot of our peers are starting to head in this direction, but they don't have those relationships. And those relationships that I've built over the last 2 or 3 years of trips to South Korea. And so slowly my peers are coming in this direction, but they haven't done the hard work. So it's been hard work, don't get me wrong, 9 trips to Seoul. And these groups are slow moving, they're conservative, it takes time. So there's definitely a movement in this direction, but the bigger groups like BHP are moving in this direction, but their strategy is more about retrofitting their existing infrastructure and the existing supply chains to fit into the lithium-ion battery products. But what we've got is this opportunity to do it nice and clean and green from day one, and we're not retrofitting tired and dirty infrastructure like our peers like BHP. So it's fair to say that the industry is built on tired and dirty infrastructure that was set up since the 1950s or 60s, maybe 1970s or 80s for the stainless steel industry. We've got the opportunity to do it clean and green with the latest technology, but have it tailored for the lithium-ion battery industry. Whereas our larger peers in the large majors, they're trying to retrofit this tired, dirty infrastructure, and it's just they're
expensive.
Expensive. It's inefficient, unproductive, and it's dirty, and it's not going to have the same green credentials that we're driving. So I suppose our peers that are smaller and junior and nimble like ourselves are doing a similar thing, and there's a number of juniors doing that, but they haven't spent the time to build the partnerships as well. So this strategy is only as good as the partnerships that we're going to bring in. So what I can say is that I've done a lot of work on that, and we're confident that the partners will come, and we're working with them to hopefully bring that to market in the next sort of weeks and months.
Weeks and months, that's where I was going for.
Weeks or months, yeah. We'll see.
Yeah, okay. So
we'll see whether it's weeks or months. So.
Yeah, but it's in 2022, so it's a very exciting time. There's a lot going on with you guys, and I want to talk numbers in a moment, but you did mention green, you mentioned the green mining, and I know that you're going to have an electric mining fleet. That's pretty exciting that you're going to go full electric, zero carbon. Just again, is that because you're starting, I guess, from a standing start, and you said right from the beginning when this project started, we know that our project needs to be zero carbon, and that's going to attract a premium. And for, I guess, investors, shareholders out there, they've got to understand that because of the strategy and where you're going, this is going to be a highly in-demand product, I assume.
Yeah, and it's not just for the ultimate consumer, but it's because that is what's the right thing to do for future generations. Like, if the technology is there, so one thing that, so I've been in the mining industry, and I think we've talked about this before, that these technologies have been around for many years, but it takes smaller companies like ourselves, startups, to sort of really question the status quo and go, why aren't we using electric mining equipment? And it's just a CapEx versus OpEx. So a little bit more CapEx up front to reduce your OpEx. And so what we've shown in this study is that on an economic basis, because we've got renewable power, this is the right way to go. So why aren't we doing this as an industry? And the reason is because as an industry, we're reluctant to change, and we haven't embraced technology. But the good thing about that is that as an industry, we're being forced to do that because the investors are asking for a net zero carbon product. What we've got is the opportunity to do net zero carbon from day one, whereas our larger peers, because they've got all that tired, dirty infrastructure, they've got all of these legacy issues, they're slow to move, they're dinosaurs, they're looking at net zero 2030, 2040, 2050. We're saying, well, why can't we do net zero from day one? And we're going to achieve it. So it's exciting because we are moving in the right direction. We are pushing the industry. We're in the electric mining consortium with some of the major players in the industry. And we're saying to these bigger groups, if Blackstone can do it, then why can't you? And that's pretty exciting. And we're just saying, why not? 2025, full electric, net zero carbon. Let's do it.
Is that when you're looking at going into production, 2025?
Yeah, so there's been a lot of, I suppose, controversy around our startup date. We previously talked about 2024. Unfortunately, we've done a bit of work on the schedule and saying mid-2025. We've copped a significant amount of destruction in the market cap, but what we're trying to build here is a long-term sustainable business. When we get the numbers, we announce them. Obviously, yeah, that is what it is. Like, there's not much to explain. There's a 6-month delay there, and yeah, 2025 we think is still a great result.
I think it's a good. Listen, Scott, people out there might be going, "Oh, you haven't hit your 2024." But let me tell you, ladies and gentlemen, I would prefer him to be going 2025, doing it right, than rushing it and getting it into 2024. Just saying. But yeah. On that note, let's go into the numbers. We are talking about the PFS. Explain to my investor audience out there why you are so pleased with the outcome, what the numbers are looking like, and why that's going to be beneficial to the company in the long term.
Yeah. So what we've confirmed in this pre-feasibility study for the upstream is that we've got a robust feedstock for our downstream business. When we integrate the upstream and downstream, we've got a $2 to $3.5 billion US NPV. So we're talking about a significant world-class scale asset that, as we deliver and de-risk this over the next 1 to 2 years, that we will trade significant upside on our current market cap. And so the only way to do that is to just deliver. So the only way to deliver is de-risk this from a technical and a funding perspective. From a technical perspective, we've continued to work through the studies, and we're working with Wood on the downstream. They're one of the world leaders in hydromet. So technically, we're on the right track. Funding, it's fair to say that the industry is not quite sure where we're going to get the funding from. What I can say is that we will show where the funding's coming from. Bear with us. We're working on that. These things take time. As soon as we can show that the funding will come from the downstream partners, we won't dilute the existing shareholders. Our focus as current shareholders, myself, is not to dilute the existing shareholders. We will do what's in the best interest of the existing shareholders. So there's a lot of work to be done to really show to the market that we can move from a circa $200 million market cap to what should be a $2 billion market cap with minimal dilution. And the way we can do that is bring in these downstream partners. We lock in the debt that comes with those partners, and then it sort of flows from there. So yeah, there's some great numbers there. We're trading at a significant discount to the NPV, but I just see that as a challenge. I understand that the only way to close that gap is to show the market that we're going to build. And as my background as a mining analyst, I completely understand how it works. Like, you close the gap on an NPV by putting something from what is a blue sky study into something that's real. And as soon as we show that this is real, it will trade at a significant upside to the current market cap.
When do you think you'll be able to talk a little bit more about the partnerships and the strength of those, and I guess how that's going to work? When are you looking at that? Because you spent a lot of time creating those relationships. It is all about partners in Korea, and of course they are big battery manufacturers. When's the news looking like it might be coming out there? Yeah,
so the way to explain that is we've got a large-scale pilot plant which we're kicking off in the next few months. So within the next 2 to 3 months, we're looking to invest in the order of $50 million into the pilot plant in Vietnam. Before that happens, we want to lock in who will be the partners in that pilot plant phase.
Yeah.
So within the next 2 to 3 months, we need to show the market, okay, these are the partners that we're taking to the next level. So we've already have EcoPro as a major shareholder. They may be one of those partners that we can see potential for multiple partners. But within the next 2 to 3 months, we want to show the market who those partners are that we're taking to the next level, which is the pilot plant. And so it's really about just locking in those partners in within the next 2 to 3 months. What I can say is that an MOU in South Korea is basically a binding agreement in Australia. Like, even though it's a non-binding MOU, these things take months, sometimes years to execute. So these groups take their MOUs, non-binding MOUs, very seriously. They put all of the due diligence and all of the work in before the MOU phase, so that once you've signed the MOU, that's basically the starter gun, we're on. So what I can say is if and when and what we've seen with the previous relationship with EcoPro is a lot of work goes in before the MOU phase. Once you've signed the MOU, then it starts moving from there. So it's a different process than what we're used to in the Western world. But what I can say is the MOU it's literally written in blood, and your partners for life.
And you've been working on this for quite some time. And as you said before, this is not something that happens overnight, ladies and gentlemen. This is a lot of time and effort, but you've got good relationships with these potential partners. But that's going to be a catalyst for, I guess, people understanding that this is a project that is going to go ahead, because I guess when it's big numbers, people go, not quite so sure.
Yeah, and I suppose that the interesting thing about that is that my background in capital markets, I understand so well that you don't want to put a big CapEx number into the market unless you've got the ability to fund it. And so you can almost guarantee that from my background in capital markets, that I'm not going to put out a large capital number if I don't think I'm going to fund it, because that's like corporate suicide, basically.
Absolutely.
So your market caps just keeps ratcheting down and no one believes you. Like, that's not the situation we've got here. Like, the reason we've gone with this project in such a large scale is because we've got the large scale partners literally beating the door down saying, when can I have my nickel? So there's obviously a slight disconnect. We're having a tough run in the markets. We had a 6-month delay, whatever. Like, the share price does its thing, But I would not have put out an $800 million capex if I didn't think I could fund that, because that's just corporate suicide. I'm not going to do that. So what I can say to my shareholders and to everyone out there is we're more than happy that we can fund this, and that's why we're happy to put out these numbers.
All right, so you put the numbers out. Let me just ask you this. Talk to me, if you could, next 6 months, what's the news flow? Because we're running out of time. What's the news flow? What can shareholders, investors hope to see from you in the next 6 months?
Well, first thing, we'll probably an MOU or something like that, maybe.
Hope so. Hope so. That's kind of key.
Yeah, well, so I think what the re-rate is some sort of understanding from the market where we're getting our funding from. So that's our biggest focus. The other thing is to continue to de-risk from a technical perspective. So that's pilot plant, definitive feasibility study, and all of that technical de-risking. But also on a technical side, we've continued to drill. We're working with the government on this Chimban target. So there's always that opportunity where we strike something that no one expected from an exploration perspective. So you've always got that excitement around exploration. But really what the market wants to see is how we're going to fund this, how we're going to take it from a $200 million market cap to a $2 billion. And the way we're going to do that is to show the market who our partners are.
I think that's really exciting. Now, just quickly, Banfuk's the cornerstone. You just mentioned a bit more exploration. Could this get, as a nickel deposit, could this get a lot bigger?
So Chimban, so the way to sort of put Chimban in perspective, so Banfuk, which is our large ore body, which is the first 8 to 10 years of mining at a large scale open pit. The mag anomaly, which like this is geo speak, right? So it's a mag anomaly, it's a red blob, who knows, but it's 15 times the size of Banfuk. We will put a drill hole into that and we'll find out what that is. So we've always said that we think we're in a world-class nickel sulfide district. This target, from one drill hole, we're going to find out whether we are or not, because if we've got something that's 15 times the size of what we've already got, then we've got something that is world-class. So from one drill hole, we'll know whether we're into a world-class system or not. And we're working with the Vietnamese government to achieve that in the coming weeks and months. So it's pretty exciting. And that's why we went into Vietnam. We don't go into Vietnam to go and chase small ore bodies. We're going in there to chase world-class nickel sulfide systems. So yeah, so
it's exciting times for you, really exciting times. Look, guys, you can read the detail of the PFS on the Blackstone Minerals website. But for now, Scott, you know how I like to finish these up. I've got an investor audience out there and they want to know why they should be sitting up and taking notice. You could probably give me 10 reasons, but I only want 3.
Yep. So one of the reasons why you should invest in Blackstone is we're one of the only players in the industry that's moving into the downstream product. So what we're seeing with these downstream players is they don't want to just bring us into the nickel precursor business. They actually want to bring us even further downstream. So what we're seeing is this collaboration that I've been working on for 3 years now. These groups want to bring us all the way through into even further downstream. So we are one of the only nickel miners in the industry that is looking at bringing in these downstream products. So the value that's added from these downstream products, we can convert it from 75% to 140 and potentially even further. So that's lesson number one. I suppose that's why you want to invest in Blackstone. The other reason is significant discount to our peers that are trading in jurisdictions like Australia because of the Vietnam discount. What I'm saying to those people is I'm much happier in Vietnam than trying to do what we're trying to do in somewhere like Kwinana. So the large scale nature of what we're doing, the investment that we require is not going to be there in areas that are more difficult with respect to labour, with respect to red tape, green tape. We're not seeing any of that. So we're seeing an industry, a government that's saying, get on with it. We're seeing investment from all angles saying, we need this, and we can work you through this. So from that perspective, we're being discounted because we're in Vietnam. I actually think it's fair to say that we shouldn't be discounted. If anything, we think that we can progress this asset quicker than anywhere else in the world. And then the last thing being, it's really about the geology. So we're only just starting to test the full extent of this system. The Chimban target will be what it is, and let's see how that plays out. Like I said, that could be a game changer. That could be one of the largest ore bodies, nickel ore bodies in the world. But there's only one way to find out, and we're doing that now with the Vietnamese government.
Boy, oh boy, exciting. Scott, it's been one of the best updates I've had from you. It's fantastic just to see how far you've progressed the project. And as you said earlier, one of the things, ladies and gentlemen, you've got to understand fully that this is not just a nickel mine. This is an integrated upstream and downstream business, which ultimately gives them a premium price. Not only that, zero carbon emissions, kind of ticking quite a few boxes, but the market's not fully recognising it yet, just because they're going, how's he going to fund it? Well, Scott's going to come back and tell us as soon as he's got all that sorted as well. Scott Williamson, Managing Director, Blackstone Minerals, fantastic catch up today, and we'll talk to you again when you got some more news, probably not very long from now.
Thanks, Kerry.